Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Moderately lower trade across most of the ag space this morning, led by weakness in the soybean market. Beans right now down 9 to 10 cents near session lows. We're seeing a continued sell-off from yesterday's classic example of buy the rumor, sell the fact type trade. Meal down about $2, while bean oil's just pushing the new lows down about 70 points. Looks like that's largely in tandem with crude oil, which is down almost $2 per barrel. In the feed grains, corn down 1 to 2 cents. Mixed trade here in the wheat, with Chicago up about 2 cents, Minneapolis off about 2 cents. Yesterday, the USDA did announce 792,000 metric tons of soybean sales to China. Cash sources suggest that this week's purchases by China is at least 2 million metric tons, so we'll be on the lookout for additional USDA flash announcements later this morning. This would be a good start to reaching the 12 million metric tons the Trump administration has been indicating China has agreed to purchase for the current 25-26 marketing year. The soybeans booked so far are for December-Jan shipment, with most coming off the U.S. Gulf, with some from the Pacific Northwest. U.S. FOB offers in the spot market are currently pretty much on par with Brazil. However, as we get off into next year in January, and particularly by February, Brazilian offers are about $1 below the U.S. As we get deeper into their harvest. So any continued purchases by China from the U.S. would largely be for political reasons and not economic reasons. The EIA will be out later this morning as well with ethanol production. The average trade guesses for production last week to have slipped to about 321 million gallons. That would be up from 316 million the previous week. And if realized, that would be above the pace needed to reach the USDA usage forecast of 5.6 billion bushels. Also yesterday, the CFTC provided a catch-up schedule for the delayed commitment of traders data. They will provide an update today for positioning as of September 30th, and another report on Friday. One report next week, and then pretty much 2 per week until we finally get caught up in the middle to latter part of January. Activity from the speculative traders yesterday was mixed, as they were moderate buyers in corn, wheat, and soybean oil, while sellers in the beans and meal. We estimate money managers short about 60,000 contracts of corn, 70,000 contracts in both meal and in wheat, while long about 20,000 contracts in oil and 105,000 contracts in the beans. Weather in Brazil remains mostly favorable. However, ABER, they did lower their Brazilian production forecast slightly yesterday to 177.7 million metric tons, which is a record, and still just above the USDA forecast at 175. Recent heavy rains in Argentina did produce some isolated flooding and slowing planting progress. However, forecasts do show a much drier trend now through the end of November. Inside trade for Dees corn overnight, as it rests at about the midpoint of its recent range, near-term support. Below the market at the 50-day moving average at 430, with resistance at last week's high at 442 3/4. Exports likely to remain strong. The U.S. competitively priced in the global marketplace, which we need to in order to reach the USDA record forecast. Probably need to see indications of U.S. stocks falling below 2 billion bushels to extend prices up to 450 or higher, which would likely mean a lower production in January. January beans currently off about 25-30 cents from yesterday's 17-month high. How much beans China is willing to buy at higher prices in Brazil will go a long way at answering how high prices can go. The surge in bean prices has pressured crush margins here to its recent lows, and providing a boost to wheat, I think, is just the lower crop ratings here. Only 45% of the crop in good to excellent condition, below a year ago at 49. Thanks for listening, everyone. Have a wonderful day.